Hi Grant, how can we help you?
How you going? Thanks for taking my call, fellas. The question I've got is McMillan Shakespeare. I think it could be one of Roger's old ones. I'm not real sure, and I would like, obviously, his thoughts on it, the company rating he's got, and if not, the 2012, 2013 intrinsic value. I'd appreciate that.
No worries, Grant. Thanks very much for your question. Look, McMillan's been a great performer for a while. We've discussed it here for a while. Bit of a correction last week. Was it on your list, Roger?
It's fallen below intrinsic value.
There you go.
Just done it. So our intrinsic value for it is $8.17. We've got it rated as it's a B3. I don't actually. I think that rating, by the way, is going to improve substantially over the next few halves, and so I'm not concerned at all about that. B3 is investment grade for us anyway. When it was trading up around $10.60 and up around above $10, there were quite a few people in the market who were saying to me, Roger, you've missed that one. You sold out of that one a little bit too early. Now it's trading at $7.73.
Time to go again.
Yeah, exactly. Thank you very much. I just think if you wait for discounts to intrinsic value, you tend to do okay. So, good quality business. I like its prospects. I think the changes to recent legislation favour it. Fringe benefits tax and for salary packaging, and it's at a discount now to intrinsic value.
Perfect. Thanks for that, Roger. We're going to try to fit in another email right now, and that's from Barbara from Sydney. And she writes, she'd appreciate the panel's opinion on Ansell at its present price, considering its imminent dividend payment for a long-term hold. Recent news is that it's shifting away from products where natural rubber is the main cost, and will this have any impact on sales? Company also says it's looking at buying other companies outside its present condom and rubber gloves manufacturing. Is diversification good for a company that's well established and doing well in its present business?
I think it's expensive.
Yep.
I think there are businesses with clearer and brighter prospects. Intrinsic value is well below the current price. I've got it at $9.07 going to $10.77. Share price is at $13.78 or thereabouts. So I think it's expensive, and there are better businesses about. ROE is good though. ROE's been improving. Debt's been coming down. So when you get ROE, return on equity, that's stable while debt's being paid off, that's a sign of a robust business and a robust economic model. So I think I praise it for that. But it's just expensive, and I think there are better opportunities.
Excellent. Great. Thanks for that, boys. Jason from Adelaide, how can we help you, Jason?
G'day, panel. Just wanted the panel's opinion on ThinkSmart. They reported what I thought was okay during the week, and the market didn't really agree. Not that matters. Just wondering whether to add some more in.
Yeah, no, good first half result. I thought it was okay.
Yep.
I think if I had to choose between Thorn Group and ThinkSmart, I'd go for Thorn Group.
Yep.
But I think ThinkSmart is an A1 business trading at a discount to intrinsic value. I have to confess we own both.
All right. Okay. Yep.
And I think its intrinsic value could rise substantially over the next couple of years.
Okay.
So like it.
I have a question about GR Engineering. I know it's already been mentioned a couple of times tonight, but I have calculated an intrinsic value at $2.79 for 2012, and I just wondered how that compared to Roger's calculation of intrinsic value.
There you go. Listen, thank you very much for your question. This sounds like a challenge that, Roger, you didn't set this challenge, did you?
No, I don't, mate. I don't.
$2.79 he's come up with.
I've got to tell you, on the nights that I come on this program, I race home to have dinner with the family because I don't have to go out again.
I meant on your blog or something,
No.
the intrinsic value test.
No. Look, I've got the sheet. I've got our sheet here for the fund, and we've got our value. He's doing all right. We've got our value at 265.
Yep.
So no, he's pretty close.
There you go.
Yeah. So we've bought it. Our average entry price is just under $2. All right. So there you go.
Okay, good stuff. Alan, what's your question for us?
Oh, good evening. I'm interested in the panel's thoughts on small cap Technology One, ticker code TNE.
Right, okay. Thank you very much for your question. Technology One. Sorry, not one of my stocks. I couldn't tell you much about it. Hopefully the man with the laptop may have something in front of him. I'm sorry. Roger, is there anything there?
It's one I had to look up because it's not one I've
not one you cover.
Yep. Spending time looking at in great detail.
Yep.
Having said that, what can I tell you about it? It's return on equity over the last, it's been well, over the last year was looks like it was about 29%, which is pretty good. Forecast to be 31%, going to 35%, so that's attractive. Little or no debt, that's pretty good. Cash flow, we'll get that up. Cash flow looks strong, so it's actually got an A1 rating.
Possibly a technology stock then. Maybe the title's misleading.
It makes money.
Yeah, it was making money. That's why you shocked me there. I'm sorry.
Okay, so software solutions.
Software solutions
business.
Yeah.
I vaguely, actually, it's starting to ring a bell now.
It was a big .com. It was back in the .com era. It was one that went to $60 or something.
That out of my mind. That's probably the problem.
We all tried to.
Right.
It's like Melbourne IT. I think it's one that actually made it through.
But unfortunately, where it falls over, and the reason why it hasn't popped up on any of my scans, is that it's well above intrinsic value, and it has in fact been since 2009, 2010. So yeah, it's just not cheap. I've got intrinsic value of 57 cents, and it's trading over $1.
Excellent. The winners that you boys have called over the last few months when we've been on. First of all, Roger, you mentioned before Silver Lake, which you told me to buy at about $1.75. The stock's now $2.50. Gold price has gone nuts. A lot of other gold stocks haven't kept up with the price. Is that still your best pick in the sector?
Yes.
And why have a lot of these others not kept up, or do you own more than one now?
Only own one.
Only still the same?
Only own one.
Yep. And still, yep.
And I look, I'm no good at predicting where gold's going to go. I don't. I have a view, but I have to admit that view comes from my conversations with Jim Rogers, who I think is pretty much the guy, on commodities. There's a lot of central bank buying of gold. There's a lot of there's a lot of accumulation of gold now, and there's a lot of uncertainty in the financial markets or about the financial system. And when that happens, you see gold going up. It was interesting. George Soros came out, and there was a big announcement on Bloomberg, I think it was, that he was selling out of gold, and the gold price slumped on that news. What the stories didn't explain was that he was buying into gold stocks, just getting out of gold and getting more leverage, trying to buy. It's a fairly simple strategy, but you buy the high cost, the high cost extractors, the high cost operators, and then if the gold price goes well above their cost, you get massive leverage. And so, the downside, of course, is that when you're buying a stock, as opposed to buying the commodity, you've got equity market risk, you've got execution risk, you've got development risk, you've got all the risks you can imagine that aren't there if you're just buying gold and taking the directional risk on gold. Having said that, I own gold, futures, gold futures, personally, and we own in the fund, we own Silver Lake Resources. I think the intrinsic value of that business, if gold keeps going up, it's going to go up a lot more.
All right, excellent.
Hello, Chris. Thanks for taking my call.
That's okay.
I just wanted to ask about an American stock, a bit of an international flavour. It's a computer cloud company called Rackspace, RAX.
Right. And what does Rackspace do, Sophie? Do you know?
They're cloud computing.
Right, cloud computing, okay.
Yes, they're in the same sort of group as sort of Google. They're not nearly as big as Google. Their market cap at the moment is at about 5.2 billion. They've got a CAPS rating of 4 out of 5 stars, but I'm just wondering if any of your guys have got any feelings on that stock.
Okay.
Apparently, it's going to be a very big thing, cloud computing. I don't know what you guys think.
Yes, I think it already is, but thank you very much for your questions, Sophie. Do you want to talk a little bit to that?
I can't talk at all about the company. I'm really sorry, Sophie. I don't know anything about RAX, the company. But in terms of cloud computing, yes, it is a big deal. In fact, we have literally flicked the switch today on moving our all the information that's on our servers and the way they all interact. We've put that out into the cloud, and that becomes far cheaper for us. It's faster, and while there are some, while the team's all very excited about it, I do have some reservations in terms of security. That's my only reservation. It appears to be superior to everything we've used before. So at the moment, I'm excited about it. But I understand that, hacking terror or online terrorism is a growing problem globally. So that's something else to keep in mind.
Okay. No worries. Thanks for that.